Hello everyone, welcome to the video where I'll be explaining about the case of JP Morgan Chase & Co. and the open banking system. My name is Joseph Eugene Lumoindong from IPMI International Business School, and without any further ado, let's jump right into the case itself. So, in this opportunity, I will try to break down the case by explaining what is open banking, how it works in real life situation, what's the benefit for consumers, and the example of data sharing with multiple methods. And next is the risk of open banking that will be discussed and connected with the major problems in the JP Morgan case itself. And lastly, is my personal analysis that is trying to point out on finding the balance between the open banking system. Okay, so before we get jump right into the introduction about the open banking system itself, we must know about what is the background of the case. So the case explores on how JP Morgan Chase and Co approach to the open banking system, how it works there with their limitation as JP Morgan Chase and Co are operating in the US. The law has made it clear that consumers own their own financial data, including their data inside bank systems. And with open banking system, JPMC want to exercise the law by setting the terms and permit the access to third parties in order to generate new financial services. And before we get into the case directly, we must know what is an open banking system. So, open banking is often referred to as data sharing to multiple parties in order to generate better services tailored to each individuals. And open banking can be defined also as a collaborative model in which banking data is shared through APIs between two or more unaffiliated parties to deliver enhanced capabilities to the market. So basically, open banking system is a way to share your data uh, when a bank is trying to share their consumer data to a third party, and the third party will use their consumer data to create a new innovation, a new product that essentially will also benefit to the consumer itself. So with open banking and data sharing, what is the benefit of data sharing in open banking system? So firstly is to increase competition. So the concept of shared data access to third parties allows the market to innovate for new entrants. This will increase competition in the finance services industry, which can lead to lower prices and better tailored service for consumers. In addition, with open banking, consumers can choose from a variety of financial services providers, and also with these rules, the financial services market are influenced to improve and compete in a way to benefit the consumer itself. Furthermore, more personalized services are becoming the incentive for consumer to share their data as they will tailor their product and services for each individuals of the consumers. And lastly, more data equals to more innovation, and it will lead as a positive incentive to innovate for financial services industry. So next, we're going to discuss about the risk. So, as we already mentioned before, that open banking system has a lot of benefits, but also it is tied to several risks that is about data privacy because authorizing your consumer data to third-party access of for the banking information itself can lead to like a several risks regarding the data privacy, regarding how they use the data itself, and so on that we will be discussing in this segment. So the major problems from the case is coming from JP Morgan Chase consumers itself, where there is a low trust coming from one of their shareholders. In addition, with data sharing in open banking system, as already mentioned before, data privacy risk becoming one of the main risks. And the downside of it also adds from the fraud, legal, and also the technical risk. Furthermore, with data sharing of JP Morgan, they are unable to track how their third parties use their consumer data. There is a report coming from McKinsey about open banking and data sharing. There is a few that traditional banking has a tendency that they will prioritize of protection towards their clients data as also their responsibility compared to like open banking system where the database is viewed as an asset to be commercialized. And the challenge here is to win the customer trust in order to correctly have a consent for the use of their data. As a customer, they would expect that a regulation must rule, so compensation for security breaches, for example, is properly written. This explains how security risk is tied to the open banking system itself, with the risk of data breaches and cyber attacks. Secondly, privacy risk, again already mentioned, which is strongly correlated with customer trust, where they might be uncomfortable with sharing their banking information to the third parties itself. Okay, so the problem it did not stop there because there are several technical issues related with the open banking system itself. So the first one is the complexity of agreements that the third parties fintech have to deal with. Data privacy issue. Actually, JP Morgan has came up with a solve, which is they want to came up, there is a account safe software which enables the ease of control for the customer's data. And also in 2017, JP Morgan decided to resist uncontrolled third party access via screen scraping while inviting third parties to establish a formal agreements. But with each banks have their own agreements, and also each bank have their own software through APIs, the third parties such as fintech are having a hard time to comply with each individual's rulebook. Secondly, there is implementation of a standardized of API system, as again there is no guidebook that determine the rule for standardized software. And every bank have their own API system, and it can be frustrating for long-term operational. This highlighted the third issue here, where the organization failed to progress and adapt, resulting in the lack of development in fintech industry. Because again, adapting into open banking system with so many complexity that already mentioned above. For example, Bank A have a set of rulebook that fintech must follow. Bank B have a different set of rulebook. Bank C have a different set of rulebook. It created confusion, and finally it did not manage to progress and adapt. And lastly, the simplest yet the hardest thing to do is to increase consumer trust on sharing their private information. So next slide, we're going to discuss about the final output. So with all the positive benefits and also the downside effects or the negative effect from the open banking system itself, also tied with the risk, what are the keys on finding the balance between the open banking system itself? As already mentioned above in the previous slide, that JP Morgan actually have created a software to control the data privacy, but it leads into more technical issues. So what are the plausible solutions for the concept of open banking itself? So from my analysis, the first one is that financial institution must prioritize in building consumer trust as the foundation in utilizing their data for fintech innovation, because without consumer trust you cannot do anything with their data. And basically, if you don't have their trust and you use against their data, they will charge you as a data breaches for their personal information. And you can also create a report. Financial institution can create a report on what they do for the consumer data. Again, you can submit the report to each of the consumer. How can you uh, protect their data privacy? How can you use their data to actually generate a better services for them, not only to generate uh, profit but also generate a good services for them. And that actually I think it's a good first step for financial institution. Secondly, evaluating the effectiveness of third party processes for data sharing, and this will enable banks to establish a code of conducts that prioritize ethical handlings for consumer data privacy. This also includes building a risk assessment framework in order to handle the problem effectively. And lastly, it is recommended that JP Morgan Chase and Co. also develop an in-house regulatory compliance program where because of JP Morgan itself are running or operating in multiple countries, multiple regional, with in-house regulatory compliance team, they can ensure that the banking ecosystem will work with dynamic regulatory landscape in multiple regions. So that's all from my side about the analysis of JP Morgan Chase and Co regarding the open banking system and the what are the keys to find the balance between the open banking system and also the gap and also the risk of open banking system and how to tackle the risk of open banking system itself. My name is Joseph Eugene Lumoindong from IPMI International Business School. Thank you for watching. Bye bye.